Hey, good morning, everybody. April 28th, 2020, Tuesday. I have to think about the days now. Tuesday, we've been in quarantine so long, I should have a calendar that's up here that tells us how long we've been in calendar. Tuesday morning, though, getting ready for the markets with the market open with Chris Johnson. I'm glad to see everybody here. Going to do a scan here. Andrew's here. Kevin's here. Kendall's here. We got a crowd. We've got a crowd coming in this morning. Texas woke up with hail this morning. We had a little bit of just to give you the local weather. We had a little bit of a misty fog here in Cincinnati. Israel is the one that always comes up. Gillard always comes up and gives me a surprise from Israel. Good morning to Israel. So let's jump right into it here. Market's going to open up strong here, about 300 points. I think we saw this coming. You probably noted my change in my narrative from something of the markets passing into a test that not necessarily the all clear, because I don't think there's been an all clear. I don't think you can put together an all clear that would actually represent this market well. But we're making baby steps is the way we're going to talk about it today. Baby steps. The market's making some good baby steps. And they're ones that are giving us opportunities to go to the upside, which is a strange feeling for me. Simply because, the right side of the market has been on the bearish side of the market. So I'm a little bit concerned about it, but at the same time, you have to continue to go with the market flow. And you'll give me just a second. I'm pulling up this morning's slides for you. You have to go with the flow here. And up until yesterday, and what happened yesterday, I think most of you know, the S&P 500 closed above its 50-day moving average. That 50-day moving average is actually moving lower. So it's one of these things where it's a little bit sketchy in terms of an actual indicator. It's not one that you would normally look at and say, yeah, I've got to actually buy this, because when that 50-day is trending lower, it tells you, hey, this is a situation where you could see the markets actually continue to get that pressure from the 50-day and actually move it lower. In this case, sorry again, guys, I'm trying to find the exact right. We're just going to go the easier route here. If we had a 50-day moving average that were trending higher, this would be just a no holds barred. Let's go in, grab everything we can, and worry about everything else later, because the market's going to move higher. That 50-day is putting us into a situation that we know the trend is going to be our friend and it's going to carry us higher. Let's look real quickly. I actually pulled it up, and I'm sorry, I'm kind of looking with my eyes back and forth here. Let's share the screen here and look at what we've got on the agenda for you this morning. Hong Kong, my gosh, Nana, that's a far way to travel. So this morning's rundown for you. 3 things you know before the bell rings. These are just a couple of stories that I think you need to realize that are going on. One of them, of course, is oil, down another 10% today. Yesterday's rally, where did it come from? A lot of people looking at this saying, okay, is this time to go? What's built it is more or less the perspective I'm taking it, and is it going to carry it higher? I'll tell you the answer, in my opinion, right now is that yes, it does have the potential because of the last week of activity. How to identify stocks in the middle of their trend, not the end. This goes in, it dovetails perfectly with where did this rally come from? Because this is exactly how it was built, what these stocks are doing right now. I'm going to show you 3 of them that right now are very interesting to me from what they're doing with their trend. Then, is there room for more on the bearish oil trade? You know, I bring it up dangerously, almost dangerously, but I can't not say it. Before last week, what was my rule about technicals? There's always support at 0. Andy taught me that. My mentor, right? It got shattered last week. And of course, we've seen oil rally now sufficiently, a nice amount, but it flipped right back over, down 24% yesterday, down another 10% this morning. Is it going to be support at 0? There's also something you need to know about that SCO trade that I hope that a lot of you have still kind of jumped into real quickly yesterday. You probably grabbed about 15 to 20% off of that trade in one day, but it's running out. The easy money, the gravy train is running out on that trade. And I just want to make you aware of some of the changes that they're making right now so that we don't get stung by that. And then 3 stocks in the headlines and how to trade them. And then, well, that's more or less 3 stocks for tomorrow's trading. I'm going to talk about tomorrow's trading and how you get through the next 4 days, because we've got a lot of companies coming in with their earnings reports. a lot of results that are going to be hitting. First, let's hit the three stories that you need to know. West Texas Intermediate Crude, WTI as we call it, June delivery traded close at $10 a barrel. Down again, extended its losses. Exchange traded funds, and this is the important part, and indices reduced their exposure to the front month contract, that June contract. They're trying to get away from the June contract because that is where the risk is right now on this particular trade. The June contract is right now seeing all of that pressure, and it's because we've got all that glut of oil that's coming over from overseas that is still trying to figure out where its home is going to be. The Federal Reserve meets starting today. It's a two-day meeting. Nobody's really expecting anything, any changes to the interest rate, but what you can expect to see is a lot of language, and I mean a lot, around what the Fed has at its disposal. When Chairman Powell comes and talks to everybody and goes through the interviews, you will hear him talk about, well, if we didn't, and I don't think they're going to lower interest rates to zero in this time, but they are going to talk a lot about the background that they've got, the money that they have behind them right now, that they're ready to go out and issue even more debt and more stimulus packages. They are ready to write every check they can to make certain that this market doesn't fail right now. Now, in the short term, this is good. And that's one of the key reasons, probably the largest key reason, that you've seen a rally that's moved up now close to 30% since that March 23rd bottom. Without that stimulus and without Chairman Powell coming out and saying the economy is going to be where it was before this started by October, that was Mnuchin that did that over the weekend. But without that help and that, it's almost like that nice uncle of yours that would always give you a quarter whenever you came in to see him and always put his arm around you and tell you it was all right. That right now is a role that the Fed and the Secretary of the Treasury are playing. And it's working. It's getting people comfortable with the idea. There's also something else out there right now, and it's a fear of missing out. A lot of people felt like they were missing out on that last 3 to 4 months of the rally that we saw in 2019. In fact, they were plugging their money into the market, and that caused the top. Those same people are right now afraid that they're going to miss out on the move that's going to take us way back up to the tops that we saw, the highs that we saw in the S&P 500. I think, and I think you know this, that we've got more ground to cover before that happens. Right now, we're kind of dealing with not Band-Aids on bullet wounds, but certainly some gauze pads on bullet wounds instead of some really good care. And I think that you're going to see this market hobble a little bit because of that as we make our way through the rest of April into May and into June. We've got a lot of earnings season to go, but there are some green shoots right now that are starting to sprout and show us that, hey, this thing could actually be a little better than expected. SDS, let me address the SDS. I believe that SDS, if you're holding it as a hedge, I've got hedges in my portfolio. If you're holding it strictly as a hedge, then no. It is almost like, and I've never described this to you folks in this venue, if you will, in this way, but a hedged position is like a term life insurance policy. And that does not mean that we want to see this go to zero, but it's a term life insurance policy in that you are expecting it to protect your portfolio at some point down the road, right now, between now and October. Now, you could certainly take it off again, but you're going to end up paying more for that hedge if you get into it again, maybe in a month or so when things start to hit the fan again. So, to use that analogy, if you take the hedge off, and I keep mine, I have hedges on my personal portfolios right now. If I take those hedges off right now and the house starts to catch on fire, AKA the portfolio starts to go down again, it is going to cost me a lot more for me to go out and buy that term insurance to cover me until October. So you don't put a large amount of your portfolio into a hedge. It's a hedge. It's supposed to be a small amount. Think of what you pay in insurance premium on your house compared to what you pay for the mortgage. There's a good representation right there. It is one of those, I have to pay it. 2 checks you write every month. You write the mortgage, then you write the insurance. And in this particular case, you should not be playing that hedge as a trade where you've put 10 or 15 or 20% into it. It should be a small portion that as it goes down, you're going to actually take those proceeds and now start to invest it into the rest of your portfolio. So I hope I addressed the SDS hedge and whether or not you should be holding it. It is a personal, obviously, choice, but part of your strategy, it should be as well, looking out over the next couple of months. And that brings up a dangerous thing. Are people now just looking beyond the are people looking beyond the pain that we saw last month because the market's up 23% or 24%? And I'd say that they probably aren't. They've probably lost sight of the fact that we were screaming and yelling and running towards the doors just about a month ago, almost exactly. And everything seems all right now. The green shoots are coming up. The birds are singing. We're able to make a little bit more money. But what happens, and I'm just putting this out as a scenario, but what happens if the market falls 10% next week, folks? Are you going to slip right back into that same mind? Are you going to be biting, just chomping at the bit to buy into that market as it pulls back? If the latter is the case, then I'd say there's a little bit of a problem with it. We have to work our way through these stages of the market cycle here. And we're still just in the end of that first stage, which means we're realizing that the market is as bad. I think the expectations, and I'll get off my soapbox in just a second, but I think the expectations, when you look at the expectations heading into earnings, it is awesome that the companies had enough time to set those expectations low. So when we see Pepsi come out this morning and say, we're dropping all guidance, when Caterpillar drops all guidance, when they say, we don't know, if this had happened and they didn't have the chance to set the stage for that, the market would be going crazy. We'd be down another 20 or 30% right now. Instead, we've kind of embraced for this. And at the same time, good old Uncle Fed, the Fed with the quarter in his pocket and something nice to tell you, something comforting to tell you that everything's going to be okay. He's got his arm around us right now as we're seeing all this news. My fear here is that when you start to see people talking about, are we going to let states fail? There are a lot of discussions that are going to be had over the next next month or two about whether or not there's going to be another stimulus package, whether or not you're going to let states and governments fail, city governments fail, where all the money is going to come from. And at some point, we're going to have to rein this in again, and the free money is going to stop. And that's when it becomes to be hard to be bullish on quantitative easing alone, or fiscal policy, however you like to put it. Let's get back to the slides because I want to get you ready for the market before 9:15 or so. So WTI trading back lower again. The SCO is going to continue to see a little bit of upside here. Understand that they're changing the exposure to the front month contract in the wake of last week's drop in negative territory. What that means is they're going to go back and get a little bit of the June contracts out and move back to July, so they can try to actually stabilize these ETFs. And of course, we're going to have a reverse split on Tuesday of the oil, the USO ETF, which is going to take it up, depending on where it's priced at Friday, take it up somewhere between 14 and 16 bucks. The Federal Reserve, I already started to mention that. No one's expecting any changes. Expect to hear something in the press conference about the other measures that the Fed has means. This can be cash reserves. It can be a number of things. The Fed has a Swiss Army knife when it comes to monetary policy. Most of us only know about interest rates and, stimulus, but there's a lot more to what they can do. And then on the company level, Tesla cancels plans to bring workers back to the U.S. car plant this week. I thought this was interesting simply because the news cycle for the last 24 hours has been just laden with stories about how we're getting back. California they showed pictures of California from last weekend, and everybody's out on the beach. Now Governor Newsom is saying, we need to take a step back here. Tesla was already kind of pushing the edge, asking their employees if they wanted to come back. And they were actually one of the outfits that had employees working after they put the stay-at-home orders in place. So Tesla backing off of that, I think it's probably a little bit of PR for the company as well. But remember, it's always important for Tesla to hit those monthly numbers. And clearly, they're not going to be able to do it this month as everybody's been idle. So where did this market rally come from? Well, if we go back to Andy and my mentor, he's got a simple answer for us. There are more buyers than sellers. That's it. Book closed. Let's move on to the next subject. Next slide here. That's not true. Investors are reacting strongly to the reopening news here. So for the last 2 weeks, we've heard news about reopening, and it's coming. Here in the state of Ohio last night, our Governor DeWine, came out and outlined our little bit of opening that we're going to be seeing happening. There are, this is kind of that buy the news or buy the rumor, if you will, but it's a longer term. Everybody knew it was coming, but everybody's also a little bit afraid of what's going to happen if we start to see flare-ups. Just in Indiana last night, they had their largest one single day rise in infections, and this is as they're talking about opening the state back up. So there's a lot of things that are going to happen here that are going to kind of push and pull on investors' psyche as we see this opening up. But the opening is what is driving the markets higher. We're starting to see volume come back into the market, and that was one of my complaints over the last couple of weeks, is that volume has been stagnant. We're starting to see it come in as earnings season moves. It suggests the market is gaining momentum. Momentum versus movement. Movement is us going up 2% and not having any volume. So 2%, the tree falls in a forest and nobody's there to hear it. But there's movement. Momentum is when that 2% move comes with everybody standing around, putting money into the pot, trying to get it to go higher. We're starting to get movement. And you could argue it's inertia versus movement, et cetera, et cetera. I think it is inertia, really, for the physics nerds out there. You're talking about the difference between inertia and momentum. But nonetheless, let me go back to this for a second. The number of stocks moving above their near-term technical resistance level, the 50-day specifically, is on the rise since the S&P 500 broke above its 50-day, and that just happened. There is a herd mentality that is starting to run the street this week, which means that we cannot fight the tape. And those of you that are Night Trader subscribers have noticed that I've been closing down puts, and I opened up what I called an offensive blitz on this market yesterday. And I'm feeling good about it because we're up a hand to the amount this morning in futures trading. So we're going to open up very strongly. And thankfully, we've got some calls that are positioned exactly for that. And we've limited some of those puts. I was watching that 50-day like a hawk, and that's the kind of trading that you need to be doing. Watch that 50-day trend. It's the most important one out there right now. The S&P 500 taking it out 2 days now in a row was a big deal, and you're going to start to get some momentum, especially as we see some earnings reports come in. And earnings really have turned into kind of a benign thing. They're not being called out for, well, we need to watch everything. So let's, and I'm seeing some questions about hedging. So I'll put together a article on an update to my article on hedging, actually, on Monday morning, because I wrote one a few weeks ago that was a really, really good one on hedging and how you can effectively hedge using the SDS and then put that money to work when we hit something close to a bottom, not at the bottom. So how do we identify stocks that are in the middle of their trends and not the end? Because that's what we're doing right now. We are looking at trends that become incredibly important. Trends have become incredibly important as the market's volatility subsides. So a couple, let's call it 3 weeks ago, trends didn't matter because we were seeing 5% and 8% swings in the market right now. And it was trying to find a trend in the noise, which becomes impossible. Instead, now the noise has died down a little bit. And even though we're seeing 2% moves, you can deal with those. These trends are identifying companies that are breaking above their 50-day moving averages in this environment. I want you to look at the actual stocks that are breaking above their 50-day moving averages on increases in volume right now. We can't have our best case scenario, which is that these stocks are breaking above their 50-day moving average while that 50-day is trending. We'll take the next best thing that tells us, okay, we can get a ride on this stock that is going to last for 3 to 5 to 10%. But because that 20-day or that 50-day is still trending lower, there is going to be pressure on the stock and it is going to revert to the mean, which means we'll be selling. I'll interject here real quickly. Alex still bullish on Hormel, HRL. In the cases of the stock breaking above their 50-day moving averages, okay, we'll scroll by this and look at a couple examples. Here's that chart that I told you I was going to show you every single day. You notice the 2 days above the 50-day here, and we're seeing at least a leveling of volume. We are not oversold. Key right now. If we were moving up to that 50-day and we were oversold, I would tell you we're not getting into this market. I'm not opening up any exposure. Here's what it looks like at a stock by stock level. I pulled this up this morning, about 4 o'clock in the morning, Bank of New York Mellon. I hate Bank of New York Mellon. I don't like the regional stocks, but I like making money, fortunately. Nice, huge break above the 50-day, and also took it to a $37 level, which has been resistance for the stock. Look at the RSI, just now starting to curve back up and volumes coming in. Bank of New York Mellon is right now a buy with a target of 40 bucks, just because it broke that 50-day and it's following the herd mentality right now. Do I think it's going to be at $50 in the next 3 months? No, I do not. I think the 200-day is going to come into play on this, and I hate the fact that the 50-day is still trending lower. I think you'll find that the 50-day will start to level out after we hit $40, maybe $41, and then Bank of New York will start to go down. But there's an example of what you're looking for in this market right now to make some quick money. Another example, Stars, Constellation brand. Look at the 50-day, breaking above it here today, increase in volume. RSI is not yet overbought, and we've got room to run up to about the 185 level here, which is where the 200-day is. Again, breaking the 50-day is following the herd right now. If we were breaking below, and there are plenty of stocks below their 50-day moving average right now, but right now, this is the signature that you're looking for in a volatile market. Now, when I say that, how do you trade these? These are trades that you should be looking at for a 3 to 5 day period. Make sure that this short-term trend that's going against the long-term trend, the 50-day being the longer-term trend, stays in place. The first day that you have a stock that falters after it broke through, maybe it goes up 5% and it kind of sidesteps and shimmies, right? That's when it's time to put in a stop loss or a trailing stop on the position and say, okay, I'm going to get out right now. Get out while the getting is good. The other thing is, if it reaches an oversold reading of that RSI, that's the time to get out. The market is going to be more sensitive to RSIs right now, more than it is just the fact that it's trading above that 50-day moving average. So your stars, and then Twitter. I have to bring up Twitter because, again, a company that I'm not particularly fond of trading, but they come out with earnings announcements that show that they've got more advertising dollars coming in. And that's a theme that you're going to hear this week quite a bit. Google's going to announce tonight after the close. And Google's going to be announcing Alphabet, rather, I'm sorry, is going to be announcing tonight after the close. And you're going to see another few social media companies that are going to be reporting this week, Facebook being one of them as well. It's going to be a situation where it's all about the advertising dollar. And they've done very well for this last quarter because we've all been inside watching our screens, our tiny little 6-inch phone screens, doing all kinds of things. I haven't, but that's exactly what you're looking for right here, that break above the 50-day, increase in volume, no RSI overbought. So that's it. Eli, we already closed out the Fifth Third trade. We closed that last week. If you want to check on the track record and check in the night trade, I'm assuming you're asking about the night trader position. We closed that out when the stock actually started rallying with the other regionals. All right, so that's what we're looking at the stock level. One more, Dollar Tree, because I love the discounters. Five Below, Dollar Tree. Look at these TJ Maxx even, and Ollie's is another one. Look at the break above the 50-day. It's coming on a little bit of an increase in volume over the last couple of days. This has the benefit of two things. First of all, these companies have been buying all of that cheap inventory, and their doors are starting to open up again, not oversold. Great short-term outlook. Let's jump into the oil trade. We're seeing another morning with futures trading down 10%. Where do we go from here? Well, two things. Storage is becoming more of a problem. I read 7 articles this morning. 7. Yes, these are still the June on the WTI. June options or June futures are coming down. 10% lower this morning. Storage is becoming a problem. 7 different articles I read between CNBC, Bloomberg, Wall Street Journal, and a few others that were talking about storage. They're talking about using the Strategic Petroleum Reserve for storage for corporate oil. So companies are going to be putting their oil in there. The We're worth another day. SCO, in my opinion. You can get another up day, and we had another big one yesterday, and some people said that they had made some money on it. You can see another up day on the SCO today as a result. The oil trade is kind of in a slide down that it's not even a slope of hope. It's just an absolute slide, like one of those wicked slides at the amusement park that you put the potato bag on and just go like a bat out of hell down the hill on. That's exactly what's happening with WTI right now. The USO is going down because of it. They're trying to get that reverse split. SCO is going the other direction through the roof. Close the trade out at the end of the day every day, though. If you open it in the morning, close it out at the end of the day. Get tagged as a pattern day trader. That's fine. But right now, you don't want to have some overnight risk on that SCO trade. And I mentioned it. Don't get too greedy. Don't get too greedy on this stock right now, or on this ETF. It is going to come down much faster than it went up. So no, solar is not tied to the oil markets, except fuel. You can see some of the alternative fuels that are getting a little bit of a boost right now. Fuel cell energy being one of them, Barbara. We actually just closed out a nice win on that trade yesterday, 50% gains in a couple of days. So you can take some of the derivatives off of that and kind of go out, spread yourself out a little bit. So here's your chart of WTI. We moved down to 12.50. I think we're down just below $10 right now this morning. XLE, 63% of the companies that are in the XLE are reporting. Phillips, you've got ExxonMobil, Chevron, Halliburton, a number of them reporting this week. That's a sector to stay clear of right now, below the 50-day moving average. And watch out here, because as we're below that 50-day moving average, I think you've got the 20-day right below. These companies have been holding in for some time, and a lot of it is based on the idea that you're going to see some government help come in and help these companies get through this situation. A lot of people have been very loud about saying no bailouts for government oil, or for the oil industry. And we've also heard no bailout for the cruise industry, but now it comes down that you're getting some help for Royal Caribbean and Carnival Cruise Line with some debt holidays for them, 12 months worth of debt holidays. So there are all kinds of aid and assistance programs that are being put together. But I think in the oil industry, you're going to find even a harder rock wall for that to run into. Beyond Meat, still like the stock. That is, you know what, we're seeing the stories on a daily basis that are shut down. Beyond Meat is doing very well. Yeah, RCL is up again overnight, Andrew, because again, people think that the bottom has put in simply because they've got this debt holiday. Things should come back around. They're actually talking about extending their period where they're not going to sell for another month, which I believe puts them to the end of August, or we'll be heading into September at that time. So 3 stocks to watch today. I want to give you something, arm you with something. We're 1 minute past 9:15. 3 stocks to arm you. Pepsi announced this morning, trading up a little under 1%, beating top and bottom line estimates, traded above the 50-day moving average. And look at this confluence of technicals that you have here. You've got the 50-day, you've got the 20-day, and you've got the 200-day moving average with the blue. I like that the 50-day is starting to roll over right now. Anissa, stay away from the USO until after the reverse split. Let's put that down in because we're going to play it with the oil trade. We'll play it with USO, or you can buy puts on SCO. Anyhow, back to Pepsi real quickly. Lots of support at the 130. It's been stuck in this range right now. I think you see us break out of this range, head back to a 145 print on Pepsi. Google announces this evening, Alphabet. I always call it Google still. Alphabet announces this evening. So 1275 is where it's been posting up, trading back above the 200-day moving average. Notice the 50-day has been trending lower. We've got 4 days above, 1, 2, 3, 4 above the 50-day moving average, and now 2 above the 200-day moving average. Volume has not been here, which has concerned me. You're not seeing a buy the rumor trade, which means if Google comes out with halfway decent earnings in this environment, they're going to shoot up to 1350 right out of the gate and then start trending that 50-day a little bit higher. Finally, Caterpillar misses by 7 cents this morning, missed on revenues. I don't think this story is going to surprise anybody. The 50-day has been trending lower, trading right at that confluence of the 20 and the 50-day. 20 moving above the 50-day is actually a bullish cross, believe it or not. That gives you usually a couple of weeks worth of trading activity to the upside, and you'll see that it's probably going to try to squeak up to the 120 level or so. But I think right now you've got too much technical pressure, also too many questions about global demand for Caterpillar's products. I look at Caterpillar, Deere, and Cummins all together to kind of get that. It's a three stock index, if you will, to get an idea of what we're going to see in terms of demand across that area, especially in those heavy industrials. And right now, that's not looking good, kind of like Boeing. VIX 17 2020, you're going to get something right at the open on that particular position there, Geo. Hang in there for that. You'll get details exactly on the position right as the market opens. With that, how do we trade the markets this week? Notice I said beyond today. We're going to get our bump Wednesday, our bump day tomorrow, but you got to get granular here. And what I mean is start going after stocks. Now that the market is broken up above the 50-day moving average, there are very few, as a percentage, we're below 50% of the stocks in the S&P 500 that are above the 50-day. You need to be picking from that 50% and then picking the best from that 50%. So the best of that, it's about 220 companies as of last night. 141 S&P 500 companies announcing their earnings this week. Watch those closely. I don't think that you're going to see any buying the rumor here, but you will certainly see buying the news. Investors want to see what is going on with earnings, and if it's good news, they're going to be all over it and buying it. If it's what we're hearing from everybody else, which is, just hang in there, things are going to be okay, and we're not going to tell you what our outlook's going to be, then you need to stay away. Separate stocks, and there is your daily typo that tells you that I was typing this at 4:30 in the morning. Separate stocks by their trends only. A stock that's up 8% today doesn't matter if the trend is just going to continue pulling it back down. We learned a lot of that lesson in March, where we had up days of 10% or 15%, followed by another down day of 20%. So look at the trends of the stocks in this market, not just the market. Beware of the 5 to 10% rallies over the last 3 days. That tells you that you got people buying the rumor. The market has not been that strong for the last few days. So anything that's moving up, if you notice, Google did not see that type of a rally. That's why I like watching Google today after the close. We are going to get a natural or a natural response from the market. So those are the type of stocks you want to be looking at when you're watching these earnings. And it's okay to open up more long exposure as we keep our eye on the ball. Realize that, the last couple of weeks have turned everything upside down. Even for someone like myself, I've been doing this for 30 years. I've been positioning myself for a pullback. It didn't creep up on me, I don't want to say, but certainly the S&P 500, and I told this to all my Night Trader subscribers, a VIX below 40 and an S&P 500 above the 50-day for 2 days has to get me playing an offensive strategy. And that's exactly what I did yesterday. I think it was 6 different trades that were sent out between closing out bearish trades and opening up some short-term bullish trades that are going to pay off pretty darn quickly here and start to turn the portfolio around very quickly. So it's okay to get a little offensive here. Go on a strong offense. I'm calling it a blitz offense right now because I'm really going at it hard. But remember that those trends are still pulling us down, and you want to be nimble when the market starts to turn, whether it's the volume dropping off or whether it's these stocks tapering off from 2% moves to 0.5% moves to a next down day. That's your signal that you need to be sidestepping and take what you've made and go home. That's it for today. I hope I helped everybody out. I wish you the best trading success. I'm looking forward to seeing you tomorrow. It's going to be rainy in Cincinnati here, so we're not going to be up on the roof, up on the deck, but one of these days we'll have that field trip and we'll be able to enjoy the outdoors together. Let's talk about, tomorrow. Let's bring some ideas. Of course, we're going to do Free Flow Friday. Everybody's going to bring their ideas, their ticker symbols that they want me to look through. And I'm going to tear through all of them, give you my bullish or bearish, one word or the other, bullish, bearish, and then what the target is on it. I know everybody likes those tickers, but also think about some questions about the market, some cerebral questions. What's going on with the Fed and this? We can talk a little bit into this. We can get into the nitty gritty on it. We're close enough now, right? All right. I'm going to get to work here. I've got to start trading for Night Trader. Everybody, enjoy your day. Get outside. Enjoy the outdoors. Stay safe. I wish you the best trading success, and I really do look forward to seeing you tomorrow. Have a great day.